Monday, April 8th, market analysis, Stan Ehrlich. And we have the stock market indexes and then futures and sometimes forex or sectors, cycles, crypto. But we usually stick to the indexes and futures. So here we go. This morning, we have a slight rally, and it was also a little lower for the day as well. So we have an inside trading range day. Today's high is no higher than yesterday's high, and the low is way above the low of Friday, and Friday is a little bit above the low of Thursday. Now, Thursday, we had a gigantic bearish engulfing, although it wasn't overbought within the allotted amount of time. We don't have an ER sell signal officially, but Thursday eclipsed, oh, yeah, funny, the previous trading range for a couple of weeks. And I think we have started a decline down to the support areas. Now, for the spider, which is the daily data chart I'm showing you, I'm really looking for something at least down to about 480, 477. And maybe a 50% retracement of this from our last October lows rally, and that would be a 467. So there's about a 10, 13 point range that I think we're going to bottom out at in a month or two or 2.5. I'd like to see it close this week below last Thursday's eclipsing day, and that would be below 512.44ish. Sooner the better. Right now we are up on the day, a very small amount, less than a point, and small amounts elsewhere. Next chart is the 1 minute chart for the spider, 5-minute chart. And as you can see today, we popped up a little bit. We went down a little bit. We're back down, back into the middle of today's range. Not too much activity so far. But that was the huge break we saw on Thursday of last week, which I am tickled pink to be able to tell you. I told you that we were in thin air, to be very careful, to watch out, etc., warning after warning, right there in time. 10:15, 10:20, when my YouTube was over last Thursday. And immediately after that, much to my surprise, and thank goodness, it dropped 10 full points. One of the biggest days we've seen in months, I believe. Next chart. E-mini itself, the June futures contract, similar to the spider, no gaps, no higher highs, no lower lows, just a little bit of a sideways range to slightly higher today at the moment. And for the 1 minute, you can see obviously that Sunday afternoon through current, not doing too much. Next is the QQQ. Again, same story. Don't want to repeat myself too many times. And again, on the Q 5 minute. So what about the NASDAQ? It's the same basically usually as the QQQs, and it is today, and the 1 minute is the same. So having gone through all of that, what about the Russell 2000? Well, it made a little higher than Friday's highs, but as you can see, it's nowhere near the highest high for the trend, which was over a week ago. And there was a big down day, a big reversal of sorts on Thursday of last week, sorry. Okay, next. The bond, Russell 2000. So up a little today, no big deal. Can't come up with anything great to say at the moment in the stock indexes, but I think we're on our way down. Next, bonds have made a new low, and that's since, I don't know, approximately the beginning of December last year, 4 months, 5. So, as I said, we're in a downward slanting channel. We did break and stay below the support area on Friday. So we're following through with new lows completely today. I think we're going to see the bottom of the channel tested in the next week or two. I don't think it's going to come that fast. I am looking for this downward slanting channel to eventually, in a month or 2.5, produce a low that is going to be the real beginning of the next rally, which will make new highs for years. Next chart. Same commentary in general for the 10-year notes. Don't quite have a channel, but what we do have is a double top or something extremely close. And I like the looks of it. So I measured the downside objective, which was and is about 108.28, as I've been saying, a little below 109. And guess what? Today's low is 109 and a few ticks. Super close. So, and in oversold conditions. So I'm getting ready to scream bloody murder by it, but it's too soon for a really big move, I think. So if I do get a buy signal, I may not be super optimistic on a long-term basis, but of course, optimistic on a short-term. Next, or long-term, both. We get the 10-year note, 1-minute chart, and you can see it opened a little lower, then came up, tried to close a little gap, dribbled back down, started stepping its way, had a rally, and here we are. Nothing great, except new lows. Crude oil, heating, unleaded, and then natural gas later. So, upside exhaustion gap on Friday, I alluded to that. Overbought conditions. A couple of combinations I like to see for the beginning of a move down, and we have a little bit of a move down today. We did not get up to the resistance area, which I would have liked a little bit better, and then seen the upside gap in overbought conditions, but a sell signal is a sell signal no matter where it comes. I just try to anticipate them. And we don't have a sell signal. All we've got is the exhaustion gap, possibly, looks like it, and a little bit of a move down today. So I want to see some more downside, but then we're going to be coming down into support. So what have I got? A minor dip down for a few days, maybe, into support, and then another turn back up? I think so. Next, natural gas. We have an outside up day at the moment, bullish engulfing. By itself, it's a friendly signal. I wouldn't call it super bullish, although it's part of my strategy, ER signals. But I need to see that in oversold conditions also to get an official signal like we got on top back here and near the bottom here, and a sell signal on the way down here. That was just in time. Worked pretty good, though. Buy near the bottom. So nothing super great lately for signals in natural gas. But a resistance area is where we're at already. We never dropped that much below it. So maybe my support levels should be drawn down a little bit lower, something like that. But that didn't work either, but it's better. Yeah, that works. I could see a rally here. Yeah, but I'm not super confident. Next, gold. Overbought like crazy again, 88, very high. 90s are extremely rare, which we did see, and it worked for a week or so, about 3-4 weeks ago. So here we are at extremely high level, very thin air, like I said for the E-mini a few days ago, and I can't help it. That's where we are. In this area, a little tiny bit lower, way back on August of 20, we did get a fantastic sell signal, smack dab on the high day, and a gigantic move down for months. Maybe that'll happen again. I have to wait for a signal. Today, we're overbought, so all I need is an outside down day, a bearish engulfing, and I could get it if it would start to drop off pretty quickly here. But so far, not really. We're up a little, not a heck of a lot, but nevertheless, it's not happening yet. So I'm watching for a bearish engulfing in overbought conditions. Next, the silver, same story. Very high levels, overbought, prime target for bearish engulfing, and they can happen super fast. A bearish engulfing could happen literally just a few minutes, although I have to say it usually takes, maybe a half a day. But, I've seen them happen in 5-10 minutes. I've seen them happen, and I mean from a higher high to a lower low, everything. But it usually takes a large percentage of a day. So we'll see what happens. But I'm watching for bearish signals. Platinum, new high for a couple of months, 3-4 months. since January, looks like, or very late December. It might even get up to resistance. I need to see a close here, which is above previous highs of a significant amount of time. And then I'll be a little bit more confident about a little bit more of a rally. What it did do that's very important is, again, it bottomed out in this major support area. I didn't quite get oversold. And in fact, we didn't even get all that close. But the support held, and here we are, new highs for a couple months. Next, and I'm friendly in platinum. High-grade copper. Head and shoulder bottom formation of a substantial size. I'm looking for the minimum upside objective, as I've been saying now for approximately a week, at 4.3775, give or take a little. New highs for the trend today. We're getting up to 4.3040. So here it comes. It could pop for another day or two, but we're pretty high on the RSI scale already. So, and there's a gap to close a few days ago. So what I'm thinking is, first we might see it dip down to close the gap, and that would be down to 4.13-ish. Then a last final leg up and a new high ground after closing the gap, zoom, 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 zoom up to my objective, and maybe even further than that. Remember, objectives off of chart patterns are typically a minimum objective, and a lot of the time they're not even fulfilled. So you have to be careful. When they are working perfectly, great. You knew what was supposed to happen, like this is working so far, great. And you have to go with the flow. So I like what I see. I'm looking for the objective to be fulfilled. Maybe a bit of a dip to fill the gap first. Next chart. Soybeans. Well, support held last week. Getting a little bit of a rally, certainly nothing to crow about. It's only 3 days of new highs, fourth day. The question I have is, if this low here on February 29th, a month and a half ago, was that a really, really long-term important low? Well, it was significantly below previous bottoms. And I will go back about 6 years, I think I've loaded of data here. No, 3 years. And as you can see, it did break major historical support by a significant amount. But now we're bouncing back off of that same old support level. And if we make new highs above 1225, the story begins to change to long-term bullish. But I have to wait until that develops, and we're at 1184. So there's a bumper room here of 30, 25, 30, 40 cents or something. And that's quite a bit. For the moment, I'm expecting a little bit more strength because support has held, and that's more of a short-term reason. So hang on, there could be a very big long-term bottom in grain starting up, but again, they take some time usually to convince people, and me too for the moment. Soybean oil held historical, could be forming, and I'll mention it for the first time. The shoulder looks like July of 22, and approximately May of 23, a year ago, is the head of the formation, and at very close to the same levels, and the timing seems to be about right. I know how I can do this real quick. You take the bottom of the market and you draw a line over, and I'm just measuring distance and time here, and then I'll take the same little marker and go from the shoulder low, and I'm a little bit off center by about a month, but this is a very large 2-year basically formation, and as a result, being off by a month and 2 years is not so bad. So the symmetry is adequate enough. The lows are about the right price levels. The neckline would certainly come down across the highest high after the first shoulder and across the high after the head, but before the last shoulder, and there's your neckline. So this is quite a very, very big formation. We're looking at something from 40 to 60, and that predicts a very broad 80 for the minimum upside objective. Huge. Next chart. Soybean meal held support and is starting to move up for the last couple of days. But a little bit of resistance slightly above the market is going to be a turning point. If we can close above 347-ish and stay there and continue, this chart will look like historical support succeeded in holding, and I didn't think it was going to. A week ago, when it was coming down to support, I was expecting it to get broken and start to nosedive like corn and wheat did. And this is meal. But the bean group shows some signs of long-term potential major bull move. I'm not saying it's starting yet. I'm only noticing the potentials. So for the moment, I'm a little bit mixed. If we break support on a closing basis, I'll be very bearish very quickly, immediately. But on the other hand, there could be something brewing here on a very long-term basis. What about corn? Well, when you do look back enough time, you'll see that September of 21 had a low almost exactly, and I might add, with an ER bullish engulfing buy signal smack dab at the bottom in September of 21 and smack dab on the bottom low day a month or so ago. So this has the chance of producing a bull move of major size because of the historical major supports holding so well with, two of my best signals. Those are whoppers. I just love those. Possibilities of bullish. So as you can tell today, for one of the first times now, for many, many months, I am starting to mention, but not bullish yet, the possibilities before they begin to be much more obvious to more people. So next is wheat. Well, what about the bullish long-term potentials in wheat? I don't have enough data loaded, so I probably should do that tomorrow for you. But we do have a buy signal on the bottom of wheat to the exact day. That's nice. In fact, a double back to back, which is very rare. I don't think I can maybe mention one other double in the last couple of years on 32 different commodities. So they're very rare, but it's working. We now see on Friday a new high for the move up. And today, so far, we are up just a little bit, but up. And the high is very close to Friday's high. There's no sign here that it's about ready to come back down. It's breaking through a bear trend line, which is bullish. The only resistance we've got of any consequence, in my opinion, we're testing now, but that's the beginning of it. I really think 620 is plausible. Next, cattle. New low for the trend down on Friday. Doji inside trading day today, nothing going on. And I'm looking for a move down to the major support area here at 162. We're oversold for the moment, actually the last few days. So there could be a little bounce very, very soon. Next, hogs. Now overbought and in a resistance area starting on Friday. So very soon now, I'll hopefully get a red bearish engulfing ER sell signal and be going short. Today's high is a little bit above a couple of previous highs back in July, August timeframe, August, September. Okay, July, September. And it's just a prime target for a reversal. Plus the fact that you have a potential upside exhaustion gap here a couple of days ago. Next, I'm going to go to TradeStation because of ICE's price gouging. Unleaded gas for Ninja. Unleaded gas on TradeStation is dipping down some. We had two overbought conditions Thursday and Friday. No surprise we're having a dip. We do have a support line we're coming close to. So let's see what happens when it touches that. I know I mentioned the possibility of a correction on Thursday and Friday because of the overbought conditions. And here we go. So am I going to get super bearish? Probably if we close below 2.65. But I think a little bit of support in here is going to make it bounce back up. So RBOB, a little bit more of a dip on unleaded gas and then back up to new highs. Cocoa. And I should blow these up full screen. Forgot to do that for you. Wow, what a move up again. But watch out, watch out. New highs for the trend, couldn't hold it. Overbought conditions again. Now lower on the day already. And if we get below yesterday's low, which is not very far away, close, we will have a red bearish engulfing ER sell signals, and I will have to go short because of the sell signal. And this could be a very important, significant, longer-term top as well. Almost looks like a broadening top, you know what I mean? 1 high, 2 a little bit of a low, 3 a higher high, 4 a slightly lower low, and 5 is the last one up, and we may have that bearish engulfing right on time. So that would be number 5. And from this point on, it goes down to new lows, then has a little bit of a retracement, sometimes halfway up in whatever break we get, and crash from there. Next, we have a bullish engulfing buy signal today, brand new one in cotton, the rag. Slightly lower lows than Friday, but oversold conditions allow for a green bullish engulfing. We're not up very much right now. We're only up 27 ticks. I'd like to see it close a substantial amount stronger. Anywhere near the high would be great, or higher highs. So as long as it closes 1 tick or more above Friday's close, that will be a green bullish engulfing, and I will have to go long. My stop is awful close at the moment, so that means low risk. That's good if it doesn't work. And also bigger profits because I'm not all the way up to the high already. But watch out. We may be having a major turning point on cotton. Now, we didn't get to the minimum objective, 82, let's call it a little below 83, which could still happen. So now what? Buy signal, okay. Rally, maybe up to 90, 60, maybe even a little higher, which is not bad. And then in the next 2, 3, 4 weeks down to the minimum objective. So I'm not turning super bullish. I'm turning slightly bullish because of the signal, which hasn't happened yet. We need to close above the high, close above the closing price of Friday, period. Next, we've got the coffee. Possible, I think I talked about it. OJ, pennant formation. I raised the top of the pennant a little from what I used to have and lowered the bottom a little. Seems to still work okay. Not a great example, but the upside breakout on the old pennant and the downside breakout on the old pennant lines didn't work. There's no follow through down, no follow through up. And here we are having drawn slightly new angle lines. Looks like a good pennant and we're inside it. And so let's see if it bounces off the bottom. So far sideways, not much to do here. Put on an iron condor option spread where it's a double credit spread above and below the strike, and then you hope the market goes sideways, which this is done, and you would have made some money. Next, no options though in there probably. RBOB I've talked about. You guys have a great day. Profitable trading to you.